Hey everybody, welcome back to my YouTube channel. If you don't know who I am, my name is Antonio, and in today's video, I'm going to be breaking down the exact three-step entry model that I use to execute all of my trades. Now, before we go ahead and get into that in greater detail, I did want to mention me and my team have an absolutely free Discord with a free course that dives into the concepts that I'm actually going to be discussing in today's video and many more at greater length and greater detail. And if that's something that interests you, make sure to go check out the description below this video. With that being said, let's go ahead and dive into today's topic. All right, now I wanted to go ahead and kick off this video by saying that in the social trading media space, strategies, entry models get over glorified, over complicated for absolutely no real reason, when in reality, the real principle at play here is that no strategy is going to make you profitable if you can't actually execute it. So it's actually a trader that makes the strategy work, not the strategy itself. And that's something that a lot of people have essentially as a misconception when they approach trading. So I want you guys to understand that before even diving into this video, because there is no such thing as a golden strategy, nor am I preaching that my strategy is the golden strategy, but a lot of people are. All right. And you got to watch out for that. Now, with that being said, the basis of my strategy is the fact that it's a continuation model. All right. At simple, I'm essentially looking at the higher time frame trend and narrative, recognizing it, and looking to partake within a continuation of that overall trend with a retrace before we essentially continue. All right. Now, with that being said, what does that actually look like? Now, three basic steps here. All right. I want to keep it simple. KISS. Keep it simple, stupid, guys. There's no reason to have 10 different concepts at play, 10 different pieces of confluence when that's not what you need. Okay. Trading is already emotional as it is. There's already enough moving parts. All right. Focus on what you can control, and that's it. Let the probabilities play out. Now, the three steps. The first step of the entry model is to simply wait for a retracement to a higher time frame fair value gap. Now, if you can pair that retracement to the higher time frame fair value gap with a sweep of liquidity, for example, on the lower time frames, that would be absolutely a plus plus. Okay, that's why I have it there as optional. It is not necessary, but if you can pair it together within the right context, it is magical. Now, the second step, you are going to wait for a lower time frame break of structure. All right. And then lastly, the third and final step is a retracement back to an area of interest, which can be a fair value gap, an inverse fair value gap, or a combination of the two. You could also use something like the golden pocket, but I found myself, just making use of these two for the most part. Okay. Now, before we can go ahead and actually execute and I showcase some examples of this entry model actually working, what are you going to do beforehand, pre-market, with an actual trading plan? What is your job as a trader to actually do now that you have this information? Going into the day, going into the session that you're actually looking to trade, develop a bias. Look at that higher time frame narrative. What is the trend looking like? More importantly, are there any higher time frame areas of interest that you need to mark out? Any fair value gaps? Any draws on liquidity? Anything like that? Okay. And then lastly, make sure you have defined trading times. All right. Have structure to your actual trading. I trade from 9:30 to 11 a.m. And if I'm looking to trade the afternoon session, it'll be from 2 p.m. to 4 p.m. And that'll essentially be it. So have defined trading times. Okay. With that being said, it is that simple, guys. All right. I want to go ahead and actually showcase some examples of this entry model at play with price action. All right, so let's actually go over to the charts. All right, so we're here on MNQ. I'm going to be making use of the replay feature on TradingView. But before we go ahead and actually showcase examples of this entry model, I did want you guys to keep this in mind, time frame alignment. Now, as of lately, I've found myself using the 15-minute as one of my higher time frames in terms of actually marking out my higher time frame areas of interest. Simple reason for that being, is the market has been extremely volatile as of lately. And on the higher time frames, we're just making these absolutely massive, massive moves with absolutely massive areas of interest. And I prefer to essentially just zoom in to actually have proper executions. With that being said, it all ends up being preference once again. There is no such thing as a perfect time frame, okay? If you're using the 4 hour, the aligned time frame would be the 15-minute. Obviously, go ahead and backtest all of this, and it is preference once again for the 1 hour, the 5 minute, and then ultimately for the 15-minute, the 1 minute. All right, I wanted to make sure you guys understood that and get that out of the way before we go ahead and actually showcase this. So I'm on the 15th, okay, and this is the 13th of March, and this is at 10 a.m. So what are we doing? Actually, let's play it back to 9. Let's go back to 9:30, right? Market open. What is market actually looking like right now? Overall trend is looking pretty much bearish going into this day. If we zoom out on the 1 hour, we essentially we're generating all this sell side that we had now taken out. We had broken structure to the downside on the 1 hour after taking out this higher low. We had also made a lower high here on the 1 hour, and on the 4 hour, what are we looking like? Go ahead. Let's go ahead and get rid of this real quick, guys. On the 4 hour, what are we looking like? On the 4 hour, it looks like we're essentially still kind of within that channel, generating some of that sell side. But with everything on the 15 and 1 hour, we could potentially draw lower. Okay. So 1 hour and 15 are obviously bearish. So we have that bearish narrative going into the day. All right. So 9:30 plays out. All right. We have that specified time frame where we're actually trading from 9:30 to 11. So what are we doing? Do we see any areas of interest that are been recently created on the 15-minute time frame? We had some fair value gaps here that ultimately all got invalidated. Okay, so nothing here. So let's just continue to play out price action. Okay, let's wait right here. All right, 9:45 plays out. Any area of interest that we're seeing? Nah, we ended up drawing lower. So what is my thought process at this point? Okay, we have taken out generated sell side, right? We had seen on the 1 hour and on the 4 hour how we had that channel to the upside, right? And we are starting to take out all that generated sell side that we had as we were trending for a period to the upside. We have now taken this out. So we've taken an external range liquidity pool. Now, with this in mind, most likely price action is going to retrace to a fair value gap or to an area of discount after such a big move. All right, so we still don't even have step one of the strategy yet. But if we go ahead and play one more 15-minute candle out, we can see that we do actually end up forming, right, this 15-minute bearish fair value gap after that candle ultimately ends up printing. Well, actually, no, this candle already printed and we had the 3-candle pattern. It already had been created. My apologies, guys. But we have this bearish 15-minute fair value gap. And what I'm essentially waiting for now, this is essentially at 10 a.m. I'm going to zoom down, go to the 1 minute. And all I'm waiting for is at this 15-minute fair value gap, is there anything near it that we could potentially manipulate to then actually deliver with even more momentum to the downside from this fair value gap? We have beautiful buy side here that we can take out. Well, actually, did we end up sweep? Yeah, we did technically sweep that out. So there's no buy side yet. We could take out this buy side up here and then actually have like a 15-minute candle that ends up flipping. So let's go ahead and actually play this out. Okay, boom, we've tapped into it. Step one, we've already identified the higher time frame fair value gap. We have now traded into it. What are we doing? We need to wait for that break of structure on the 1 minute. At this point, our break of structure is going to be when price action is able to take out this previous higher low on the 1 minute time frame. All right, we have that marked out. What do we see? What do we see? What do we see? What do we see? Beautiful manipulation. Beautiful. What is the 5 minute looking like here? Okay, what is the 15-minute looking like here? We love that. We love that candle flipping like that and that nasty top wick getting created and having it flip red and close back under. We love that. We love that. We get a little bit of foreshadow there since we're on the replay, but that's ultimately what you guys want to be seeing. As we're doing this and we get that manipulation, you want to start seeing that top wick being printed and that candle starting to flip and get pushed down, that body starting to get pushed down. This is beautiful. This is beautiful. We need to go back because this is actually our entry right here. We get a break of structure. More importantly, we got the optional A++ manipulation sweep of buy side. On that same leg that we manipulated buy side, we broke structure immediately. Clean, clean, clean momentum. We had an internal sweep, took out buy side here on the same leg that we then broke structure. Beautiful, beautiful, beautiful. Not only that, what is the third and final step? Now we have two. What have we checked off? Step one is higher time frame, FVG, boom, plus sweep. This is a Picasso right here. Okay. 2, break of structure on the lower time frame. We've checked off both. What is the last step? The last step is going to be a retracement to an area of interest, which we have right here in the form of this 1 minute bearish fair value gap. And like I mentioned, we could stack the areas of retracement and the areas of interest on the lower time frame. We also have an inverse right here. We inverse is bullish. Stack it together. They overlap rejections. Go ahead, take your entry there. Absolutely magnificent. We're going to place your stops right above those fair value gaps. We can go ahead and target this low here. Does that give us a nice 2.49 risk reward? You can also target this as another TP. So let's go ahead. This is TP1 already way above a 1 to 2R. So this is A plus plus, guys. This is A plus plus. This is a perfect example of an A plus plus. All right. Boom. Go ahead. Place your stops. Put it here. We could even actually, we could give this more room. We could give this more room. Give that some more room. Make sure this TP here is still at 1 to 2R. Yep. Comfortable. So I'm going to fully have this exit out at this 1 to 2 because it's replay. And I want to make sure we get filled there. But this would be our second TP. So let's go ahead and roll the tape. Bang. First TP. Absolutely smacked. 1 to 2R. What happens? Big retrace. Big retrace. I would have definitely gotten stopped out here. If I would have trailed, for example, 75% of my partial, 75% of my position here, I would have definitely moved in stops to like this previous lower high. Gotten stopping out on the rest here. I am not going to cap here, say shoulda, coulda, woulda, but as we can see, final TP does end up getting absolutely smashed. 3 steps, you absolutely cream the markets if you stay diligent and all within that time frame that I told you guys, right? This was essentially at 10:30, exit 10:38, 8 minutes. If you would have held till full that last target, 11:16. It's a relatively longer trade there, like for around 40 minutes. But 8 minutes for that 1 to 2, beautiful. Let's move on to another example. All right, guys, now on to the second example. So we're here on the 15-minute time frame once again on MNQ, and this is 2 p.m. Why is it 2 p.m.? Because as we can clearly see, price action during the morning PA was absolutely dog water, okay? So with that being said, as I mentioned before, the specified time frames and ranges that I trade in between, if I'm not trading in the morning, for the afternoon, it'll be 2 p.m. to 4 p.m. So 2 p.m. right here. What are we looking like? 15-minute is clearly looking bullish. We had a 15-minute break of structure. We took out all this generated buy side and all these previous lower highs. What are we looking like on the 1 hour? Okay, so this is kind of part of that channel to the upside that we discussed in the previous example, and we're essentially making it right here. We had a 1 hour break of structure to the upside as well. We took out this lower high. It looks very plausible that we could potentially draw to this buy side here. What is a 4 hour looking like? Okay. This is interesting simply because we had a 4 hour bearish fair value gap that we rejected, closed below, and then failed to deliver from. So that's not bearish at all. It's actually quite bullish. There's a lack essentially of bearish order flow delivering from that area of interest. And on the 1 hour, we're bullish. 15-minute, we're bullish. Yeah, I think we could potentially draw to that buy side, right? No. What are our areas of interest now that we have the higher time frame narrative? Okay, mark them out. We had these here, already filled that. We have this 15-minute bullish FEG. And then, I mean, we can go ahead and print another 15-minute candle. We have another one right here. Okay. Beautiful, 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 beautiful. Okay. Now, what would I be thinking to myself at this point? We have both of these areas of interest. You can go ahead and take out your fib tool, measure this, see which one aligns with discount, right? You're going to have discount falls in between both of them. Okay. You could kind of use this, but ultimately, this is why you have the 3 steps, and you have the second step, more importantly. Once you get that retrace into the area of interest, whether it's this one, obviously this is going to be the first one that it taps into, so it's closer, or this one, you're essentially just going to wait, because you wait for price action to react to these areas. That's why we're observers first. and you wait for that break of structure on the lower time frames. So I'm going to hop on the 1 minute now, see what happens. Oh, I like this. We have generated sell side right here, right above that 15-minute fair value gap, so we can absolutely potentially manipulate that and deliver from it. So that's beautiful. Let's go ahead and play price action now. Boom, we tap into it. What am I waiting for now that we've tapped into higher time frame fair value gap? Step one is done. Step two, wait for that break of structure, right? Because we don't know whether we're going to deliver from this one or potentially this one, okay? Or potentially wick through this, tap into this round, and then deliver. That's why we wait for the break of structure. A break of structure is going to be right above this lower high. Now it actually becomes above this lower high. Okay, beautiful. We get that break of structure. Nice candle. We close above this lower high and above these previous stock lower highs. Third and final step, area of retrace. We have this 1 minute bullish. We also have this 1 minute bullish, but it's quite small along with this one as well. So what I would do here is I would go to the 30-second, zoom in, try to get a clear picture of what price action is looking like on the 30-second. Is there any area I could potentially stock here? We have the 30-second here. Okay. So in general, I know for a fact that I want to be buying in this area. Okay. We have the 1 minute fair value. I'm not really looking to take that one just simply because that's really, really close to the break of structure point. And we have this beautiful 1 minute kind of at the halfway point of that leg that broke structure, which would ultimately give us a better RR entry. Okay. So we go ahead and wait for price action to play out. Boom. It taps into. Now, for replay, we're going to get an absolutely dog water fill because the candle already closed and you can't set limit orders on replays. Ideally, and how it actually works, or at least the way I do it on price action, is once we've gotten that break of structure and we have our area of interest that has been formed, I go ahead and set my limit. I set my limit so I can get the best possible risk reward entry, and I would essentially get filled here, right? You would get filled here with a limit order. You would place your stop right at the top of that 15-minute fair value gap, essentially at the bottom, giving it some breathing room way below that fair value gap where you're taking your entry. And you could simply target these highs here, low hanging fruit for 2.57 risk reward. You could target these highs right here for 3.46. You could potentially target this buy side right here that we covered at the beginning for way more than you really need to. So low hanging fruit would be right here, and it would be a great TP, great risk reward. But because that is not what's going to happen to me, I'm going to actually get filled way up here. My RR is clearly going to be absolutely awful. So for the purposes of this video, I'm still going to run ultimately the what's it called, the trade, but I'm just going to exit at a 1-to-1 right above this high if we do get there. So let's go ahead, take our entry, awful fill, just absolute dog water, and boom. Okay. So as we can clearly see, the trade would have worked right here if you would have taken your entry how you are supposed to with that nice limit order. You got nice stops, give it breathing room. This would have absolutely smacked 3.55 RR. Creamed. Beautiful, beautiful, beautiful. All right, let's move on to the third and final example. All right, ladies and gents, the third and final example. So we're here right at market open, once again on the 15-minute time frame. What are we looking like? The first 15-minute candle before we mark our areas of interest, right? What is narrative looking like? 1 hour is clearly bearish after this absolutely massive dump. We broke structure. We had been essentially just trending to the downside. 4 hour, bearish as well. Ultimately lower high, lower external high in comparison to this one, and we have just been drawing lower. Overall narrative is bearish. What am I also seeing now? Going into market open and at market open, right? We had previously delivered from this 15-minute fair value gap right here that we tapped into and then continued downwards. This was actually pre-market going into New York open. And we also had this fair value gap right here that we had also tapped into going into New York open. Now, like the previous example, right, if you have two areas of interest, you're essentially just waiting for that break of structure. But because this is already pre-market and before the specified time ranges that I'm actually trading, I'm not even taking into consideration this, but I do take it into context, right? I want to mention it because it's right there in front of your eyes. But that's the explanation essentially behind it. So the only other area of interest that I really have is this 15-minute fair value gap. And if we go ahead, see if this is quality, or we can filter it a little further, it would be this whole leg actually. What do we have here? So we have this guy right here, and we have that 0.705 on that golden pocket, right above the golden pocket, excuse me. And we have essentially wicked above these levels, tapped into that bearish 15-minute fair value gap, and closed below right at 9:30, that first 15-minute candle. Essentially that forms at the open. That finishes forming, excuse me, at the open. So we're respecting our higher time frame bearish areas of interest. So I'm going on the 1 minute. What am I actually looking for on the 1M? All right, what do we got? On the 1 minute, yeah, these are breaks of structure. These are internal breaks of structure. So at this point, I'm really just waiting. Waiting for price action to show. We have made a lower high. I like that. We have made a lower high. We do have a bearish 1 minute right here. What is a 30-second looking like? So at this point, 1 minute is looking bearish. We have had our internal breaks of structure. At this point, I'm going to zoom in, go to the 30-second. We did break structure on the 30-second. We broke this higher low on the 30-second. So, okay. At this point, you could take entry here, right when we tap into that. I'm going to let a couple candles play out. Okay, that's another minute. Go back to the 1 minute. What are we looking like? Okay, so price action has now tapped into that 1 minute bearish for rally gap, 30-second. What are we also seeing? What are we seeing? We're manipulating this, potentially manipulating this internal high right here. Okay, so you see how I'm stacking that confluence on a lower time frame within that area of interest. So we've already had that first step, second step on a lower quality 1 minute break of structure, but we have paired the 30-second with that confluence. So once again, you guys are seeing how I'm making use of multi-time frames, essentially. Yep, I mean, at this point, you can go ahead and take an entry here. I would just do this lower risk. So you can go ahead, boom, essentially have your limit order. Once again, you get filled once price action tops into there. Our fill here is going to be absolute dog water. So the stops are going to be absolutely fat. So ideally, right, let's actually measure the real risk reward first. You would get tapped into it, say right there. So just down to the bottom of that leg of that move right there. That's already more than a 2 risk to reward. So let's go ahead and see if that ends up playing out. Okay, so that does end up playing out absolutely beautiful, right? Obviously the fills were dog water, like I said. I do want to see something though here. So, okay, on the 1 minute, a cleaner break was right here, right on the 1M. And this is still at 10 within our time frame. So let's see, what do we have here? We have another bearish 1 minute. This is a big 1 minute. So I could grab a golden pocket here. See, does price ever retrace back into that? It does tap into right there. Let's see if you could have taken a potential sell here for a continuation. Because that first trade already worked out. We know that. But I just want to see, do we continue dumping for the rest of the day here? There's a big stop, lower size. Once again, try to target at 1 to 2, and you could simply move stops to break even. Do we have any other higher time frame objectives here? On the 15, do we have any other? Doesn't seem like. So ultimately what I would do here is off that trade is minute we take out this low right here. Low break even. Boom. Let this trade play out. So the minute essentially it's right here. Right here. Move stops to break even. You could partial if you wanted to. But ultimately I would just move stops to break even, and you get stopped out right there. See, do we continue dropping? And we do. It ends up at that 1 to 2. It does end up working out. So you guys can see right there how I'm essentially layering some of the lower time frames to get further confluence on the trade when it starts setting up, and we start checking off those lists with that example. Excuse me, checking off the steps of essentially of the entry model as we did right here. That essentially wraps it up, guys, right? Keep it simple, stupid. 3 steps. Higher time frame for value gap retrace. Okay. Once you have your narrative and overall trend, lower time frame break of structure, lower time frame retrace to area of interest, like a fair value gap or inverse fair value gap, or a combination of those two. With that being said, as always, guys, stay safe, stay blessed. I'll catch you in the next video.